Hey, welcome to the Blockchain Revolution. I'm Molly Elmore with Val Hill Advisors, and today we're going to talk about part 3 in the series, which is payments and settlements. So these are very financially oriented uses for blockchain technology. I think the largest, in my opinion, application for why businesses need to understand the blockchain, because it's going to really change how money is moved throughout the economy and the ecosystem. Just want to clarify a couple terms that are helpful for this particular discussion. The first are the ideas of payments versus settlement. So when in English, if you talk about paying someone, that usually implies that there's actually an exchange of money, meaning I'm going to pay you $10 and I give you the $10 and we're done. However, in this context, we're separating this exchange into two parts. The first part is called the payment, but that is actually the communication around the payment. So my favorite analogy for how this works is through an invoice. So if I send you an invoice by email and you receive the email and you open up and you click pay invoice and you put in your credit card number or connect it to your bank account and you hit submit, that is the payments process. We've had a communication between me and you. I'm asking for money, you're agreeing to pay the money, and that communication process is now set. However, there is no actual exchange of funds in that scenario yet. The actual exchange of the funds between banks is referred to as the settlement. So this is when we settle up and actually move money from one account to the other. And in many cases, interestingly enough, with banks, no money is actually moved. It's just sort of an accounting thing where money will be deducted from one account and credited to another account. So sometimes in your mind, when you literally think, I'm going to send you money, it might feel like someone is literally sending money somehow. But for the most part, with the current financial system, money is just debited and credited from different accounts. And if there's a whole lot of transactions going on, let's say between two banks, what they could do potentially is just wait until the end of the day to sort of settle up. So these are important terms to understand when we're talking about digital assets and payments, is that the payment side of it is really communicating information about the upcoming settlement. And then the settlement is when the funds are actually settled up and accounts are credited or debited. Or in the case of digital assets, we do see an actual exchange of the property rights of the money itself. Now, if you've ever heard of the SWIFT network, which is how a lot of banks send money internationally, that is a payments network, meaning information is communicated about different transactions, but no money is actually settled. And Ripple actually has a product called RippleNet, which is also a payments network where, again, same thing with communication. So let's talk about some of the use cases for blockchain, for payments and settlements. So for the rest of this discussion, we're just going to kind of lump them together. I just wanted to clarify those terms up front. So one of the biggest use cases for business is payroll. So if you've got a lot of employees and you've got to pay them every 2 weeks, right now in the US, at least, there's some large companies like ADP and Paychex that will process those transactions for you. And one of the current realities to the system now is there's a delay between when the money is taken out of the business's account and actually credited into the employee's account. And that money could be moved very quickly, but it is not, because the current business model lets the processor of those funds actually make money off what's called the float. So if I am Fiserv, who processes a lot of these for bill pay, I could take, $1 million out of your business bank account and I could lend it out for 2 or 3 days for short-term loans and then credit the employee's accounts on day 3 or 4. And this is why in many cases it takes days for funds to get moved. It's not because it's technically not possible. It's because the current business model supports making money off of this float short-term loan system. However, I do expect that we're going to see a transition away from that towards what is referred to as instant settlement, where the funds are taken from one account, which is going to be managed via a digital wallet, which is a software application, and the rights to that money will be moved over very, very instantly. While the people who make money off the float aren't going to be terribly excited, there are some really great benefits for the economy and for businesses and employees. Namely, you get your money quicker if you are on the receiving end of the funds, which means you can go out and spend it and do other things, which in economic terms is referred to as the velocity of money. We expect to see that the velocity of money will increase once funds are available sooner, which simply means people can go out and buy stuff and pay their bills and spend their money much more quickly. And if you think about, a 3-day gap for one person not being a big deal, when you apply that to like hundreds of millions, if not billions of people, that adds up to a significant increase in how money flows through the economy. The second big application for businesses with digital asset payments is in the accounts receivable and payable. Basically, the bills that companies have to manage. They're either sending out bills to their clients or they are paying bills for their vendors or suppliers of what sorts. And right now, most companies need to have a staff to manage that. So you'll send out an invoice and maybe you have like net 30, they got to pay it in 30 days. And then not everybody maybe pays their bills on time, so you have to go out and follow up with them. And this can be a somewhat labor-intensive job for somebody to have to make sure that all the invoices are paid. Now, if the system changed and we all had digital wallets, and the people who are needing to pay a bill connect those wallets instantaneously and the funds are exchanged immediately, there would be no need for follow-up. Like that idea of waiting 30 days to pay a bill, or even some cases net 60, that may very well go away, and we will just see the exchange of funds happen instantly. That will also remove some of the counterparty risk for businesses who have to do something and then send out a bill and they don't get paid for 30 or 60 days. There's always that risk that something happens in that time frame and they never get paid. So by having this instantaneous settlement, sometimes referred to as atomic settlement, that means that there is no time gap where you have to wait to get your money. This also ties into the velocity of money point we made about payroll, which is if I'm a business and I'm billing my clients and I get the funds immediately versus having to wait a month, I can now deploy that cash in a variety of ways. I can hire more people, I can buy more stuff, I can spend it on marketing. Like there's a whole bunch of things that businesses spend funds on, and those funds will be available very, very quickly. The third use case is a newer application for payments, and it's what we refer to as micropayments. So in the current financial system, it's not really feasible to charge people very small amounts of money in a particular bill. If you think about, if you've ever had credit card processing, you know that most credit card processors charge a flat fee of like something like 30 cents plus a percentage of the transaction. So if I, for some reason, wanted to bill you 50 cents, like I would lose almost all that to these fees. So the credit card system for payments does not like very, very small transactions. Even if you remember when Apple iTunes came out and you could buy songs for 99 cents, you often had those charges bundled together so that one sort of transaction would go through that would be many dollars. However, with digital assets for payments, that changes. And you potentially can process transactions at a very, very low cost, like a fraction of a penny, also very quickly, which means that new business models where you can charge people small amounts of money will evolve. So let's talk about some examples of how this could work. Let's say you currently charge a subscription for some kind of media content. And let's just keep it simple. Say you charge $30 a month and you bill people monthly. You have the choice to bill them up front, which means that they're taking on some risk that you might, be a flake and not deliver. Or you bill at the end of the month, which means you take on that risk and hope that the people actually pay, after you've done your part and delivered the content. So micropayments would be a newer mechanism where you would charge people, let's say $1 a day, and that removes that risk. So now we're charging in real time. So as the content gets delivered, you charge the payment. This will change how a lot of subscription businesses work. Think about like cell phone bills, utility bills, even rent, even something like a hotel room or vacation rental, where you have to, or a car rental where you have to pay car rental for like a 24-hour block. Why can't I just rent the car for however many hours that I need it? I know some car rentals in cities support this, but your major car rental changes like the Hertz and Avis and that kind of thing will see different models of payments come up, because there's going to be some people in the current ecosystem that you're in who don't want to commit to an entire month knowing that they only need a small amount. So having micro payments as an option should open up the market to new people who don't necessarily need the full amount of whatever. And then a subset of the micropayments is sort of a subtle nuance that's called streaming payments. So these are a little similar in that you are charging people very frequently small amounts of money, but you almost set this up where it kind of runs like a spigot. Like you turn on the tap and the water drips out. So you could, let's say you are a movie creator and you didn't want to charge people for the movie that they didn't watch. So you could potentially just bill somebody, every second, like the tap is on and you're being billed for as long as you watch it. And then when you stop watching it, the billing turns off. So these are called streaming payments, quite similar to micropayments, but it's just more of this continuous cycle where micropayment just implies a small amount. And then another part of the micropayment, I think, will affect the media world considerably, where ever since Web 2 came out, we've had ad-supported media, which has pros and cons. I worked in the advertising media business for a very long time, and there is often going to be a conflict of interest between the creators of content, the publishers generally they're referred to, and the advertisers and the end, reader or viewer, and that sometimes all three of those groups don't have the same interests. And so when the advertiser is paying the bill, they tend to win that argument, and the content is often curated to meet the needs of the advertiser. So if you wanted to move away from ad-supported model, well, how else could you structure it? You could do that subscription that I mentioned before, where you charge people for an entire month. But I might sort of click on a search link and go to some random website. I don't necessarily want to commit to a whole month of your service if I'm just finding out about you for the first time. So micropayments could allow very small transaction fees for people to support content creators that they like, almost like you would tip someone, or the musicians who kind of set up outside. You kind of throw a quarter in their music equipment thing, and you kind of busking. That is sort of an analogy for how content creators could potentially be compensated online. The music industry really changed when Apple iTunes came out. It moved away from this structure that had been in place for a long time, where you had to buy an entire album, and now you could just buy one song. Well, what if you were just going to buy that song directly from the artists themselves? We're going to talk about this in the NFT video, because a lot of this blockchain technology will absolutely transform how artists, creators, and entertainers have relationships with their end buyers. And one of the sort of the big changes will be this facilitation of micropayments, where I can just tip you if you write an article I like or make a video that I like, and it doesn't have to be a very big expense. Now, this would be a volume game for the content creator. You would obviously want to collect a lot of these micropayments. But if you are a creator who has a big following, millions of people are reading your articles every day, if each person were to tip you, 20 cents, 50 cents, $1, whatever, that can add up. And you, as the content creator, can just serve the interests of your end viewer and not necessarily have to worry about some kind of potential conflict of interest with advertisers. I don't mean to imply that there is always that conflict, but I've seen it happen. And I've also learned that a lot of people assume that there'll never be a conflict until one day when there is, and now you have to resolve that. So I think that the world of media, content, entertainment will be wonderfully changed as micropayments allow the creators of those types of content to have direct relationships with the viewers and consumers, and the consumers can ultimately end up paying. Because the other thing that's important to know about the ad model is that when the product is free, and most media content currently on the internet, the vast majority of it is, quote, free. Well, when it's free, you are the product. You are your data is being sold to advertisers. And the advertising industry is fantastic. It employs a lot of people, and it helps educate about amazing products and services. But there isn't always a clear understanding from the actual end user what's going on. And so to have a more transparent relationship about who's paying for this actual media content via micropayments, I think will be a step forward in the industry of media and content. All right, so we're going to wrap up. So payments, difference between payments and settlements. Payment is really communication about the transaction. Settlement is actually where the money changes hands. Then we have some use cases for businesses, absolutely payroll, accounts receivable, even expenses for T&E. And then we have this really new sort of application for payments that is coming via micropayments that are not currently financially feasible right now, because the financial system we are in doesn't love these small transaction amounts. Logistically and financially, it's just not that feasible. But with blockchain payments with digital assets, We're going to see all sorts of cool new ways for people to have financial relationships with businesses and be compensated, including the streaming payments idea, which we're pretty bullish is going to revolutionize content, movies, music, and people are just going to simply pay for the content that they like and consume. So, all right, don't forget to download the Blockchain Revolution ebook. The link is in the description, and we'll see you in the next video.